What's up, guys? Mr. Fit to Flourish here, and today I wanted to talk about moving averages. And before I start talking about that, I know it's going to be a basic topic, but the reason I'm talking about it is because I've been mentoring and teaching more and more people how to trade. But not only do I talk about trading, but I talk about being fit physically, spiritually, mentally, financially. We talk about how to grow just in life in general. But a lot of people want to trade, right? They want to be able to have this skill that you use for the rest of your life. And moving averages are very important. However, I did want to mention that my brother and I, Luther V Fitness, we're going to be creating we have a Discord basically that we're going to be creating to teach people everything. Like pretty much, it's going to be pretty much catered to like young men who want to grow and learn how to grow big on social media, how to create businesses, how to increase your credit, how to get in the best shape of your life. But we're just going to be, it's going to be everything, how to trade and everything pretty much. But it's going to be a Discord catered to just become the highest version of yourself. Okay, how to be fit to flourish, how to get a rollie, all right, a blackface rollie. But just how to be successful overall. It's going to be body game, how to talk to women, how to get women, how to party scene. Going to be a lot of vlogs too. I'm going to show you more vlogs on how we do the yacht, we do the club lifestyle, we get in clubs for free, we do all this stuff. Okay, just how to live to the highest version of yourself. So we're going to be linking that pretty soon. My blood brother and I. So I'll actually link his. I'm going to link his YouTube here, his Instagram, all that good stuff. But we're going to be coming together to make a pretty insane group. It's going to be like an elite society, the Illuminati. No, I'm just kidding. But it's going to be a pretty good group of people. So look for that. Anyways, moving averages. Let's talk about it. All right. Let's share the screen here. But someone was asking me, one of my buddies, I'm teaching him how to trade, and he was like, "Hey man, what the heck are these lines, and why do you need them?" All right. Let's talk about moving averages. So what is a moving average? All right. And specifically, the ones that I use exponential moving averages. Okay, exponential moving averages. What is that compared to a simple moving average? So number one, we need to know what a moving average is. So a moving average is basically a line that captures the average price of the last X amount of bars. Okay, so it is a line that moves and captures the average closing price, okay? Closing price of the last X amount of bars. What do I mean by X amount? So when we're looking at moving averages, there's a couple different moving averages. So the main ones that I recommend using, that most highly skilled traders use, are going to be the 9, which is my pink line here. The 20 moving average. And then we have my 50. These are the most commonly used ones. There's other ones you can use once you become more advanced in trading, but you don't need to. The 100 moving average and the 200 moving average. And I'm gonna talk about a lot of different things with moving averages that you probably didn't know, and you probably need to know in order to be a better trader. All right. So what does this mean? 9 moving average, 20 MA, 50 MA, 100 MA, 200 MA. So the first thing you need to know about moving averages is that, again, it calculates the last X amount of bars. So in this case, this is a 9 moving average. It calculates the average price of the last 9 bars. So for instance, if we were to choose one bar, so let's choose this green bar right here. All right, let's choose this green bar here. Right here. If we were to choose this green bar, then we're calculating the closing price of 1, 2, 3, 4, 5, 6, 7, 8, 9. So of these last 9 bars, all right? Boom and a boom. So 9 right here. These 9 bars, 3, 6, 9 right here. The closing price. So it calculates the closing price. Okay, so what that would look like is that would be here. So that would be, okay, right here. Actually, let's do this. So that would mean right here at this point in time, at this bar, this pink line where it's at is the average cost of the last 9 bars. Okay, so what that would look like is let's measure the closes of every bar. So this close is 128.44, 128.76. So if you do 128.44 and then you do plus 128.77 plus. So you just add them all up and then you divide it by 9, okay, by the 9 bars. And then that gives you the average cost of those 9 bars. So at this point on the graph right here, on the chart, right at this point on my moving average is the average cost of the last 9 bars, okay? A lot of people don't know this, and this is basic stuff that you need to know when you start trading. And it's the average closing price. Okay, some people are just like, I don't know. But what does it matter? What do you need to know? And then 20 MA will do the last 20 bars. The 50 MA will do the last 50 bars. Okay, so et cetera, et cetera. So you're just adding it all up and then dividing it by 9, adding it all up, dividing it by 20, et cetera, et cetera. Okay. But what does that even freaking matter? Who cares about the average cost, right? Well, what if you didn't have the average cost on the chart? The reason that we have that average cost on the chart is because we want to know, hey, am I getting ripped off here? Because remember, trading is not like, technical like analysis, like a hype, like oh, I need to get in, I need to make a lot of money, $1 million, but it's not about that. Okay, who cares about that? Trading is about asset. It's about bartering. It's about trading assets, buying and selling assets. Okay, so that's just like if you went to a Foot Action, and then you went to a Foot Locker, and you're looking for Jordans. All right, you're looking for the specific pair of Jordans. You know, online it's usually selling for like $200. Okay, $200. You go to a store, and Foot Action was selling it for $120. And then you go to Foot Locker, and Foot Locker was selling it for $590. Well, how do you know if that price was too high or too low, right? Well, you know that it's too high because you know the average price online was $200. $590 at Foot Locker is crazy. Get out of here. And then 120 is kind of low. That's a good price. Let me get that. So you know you need that average price to let you know, hey, what is a good time to buy? What is a good time to sell? Okay. So that's why you need a moving average. Now, how do you use moving averages too? So a couple things that you need to know about moving averages is, okay, if we're the moving averages need to be in order so if we're looking at calls, if we're looking to buy an asset, our moving averages needs to be in order of smallest to largest. So 9, the 9 MA, the 20 MA, the 50 MA, the 100 MA, and then 200 MA. It needs to be in that order for it to be a bullish case. Now, if it's an inverse order, the reverse order, then it's going to be bearish. Okay, it's going to be bearish. So if we have the 200 up top, then the 100 below, and then the 50, and so that's bearish. And usually what happens is, as long as we're trading above a moving average, we tend to stay above that moving average until we get what's called a crossover of moving averages. So the 9 going below the 20, that would mean that we're going to get an inflection, or the price action is going to turn around and start to go down. Okay. So let me see if I could find a quick example of that. So here, okay. So for instance, our moving averages are in order. Again, my pink line above the yellow, we're still there. Pink line above the yellow, and then all of a sudden we get what's called a 920 crossover. When moving averages crossed, this shows a change in market sentiment, or what's called a market structure shift. Price market structure shift. So price will start to flip. Okay. So it'll start from, it was going up, now it's going to start going down. Because we're basically saying that the average cost from the last X amount of closes are getting, the last 9 closes are getting lower than the last 20 closes. So more recently, price is selling off. Okay. Price is coming down. Now it's just the opposite when we get an upward cross. So if we get the 9 moving back above the 20, then instead of from going down, we're probably going to start going up. And that's what happened here in this case. Massive up move. Okay, massive up move. And then the last thing that you need to know about moving averages in this moving average video is telling us that basically whenever we get too far away from the moving average, so notice here, we're like 1,000 feet away from the moving average, the 9MA, the smaller moving averages at least. So whenever we're like 1,000 feet in the air, we do what is called a mean reversion. Mean reversion, which basically means understand that if we get too far away from the moving average, we need to come back to that average price so that people would want to sell again. Okay. Would want to buy again. Okay. So like, yo, this is $500 at Foot Locker is too crazy. So then Foot Locker's like, oh, sorry, let me put it to 300. Like, that's still too crazy. The average cost is $200. And then they're like, all right, we move it down to 200. So more people start to buy at 200. And then the demand starts to go up. So then they could start raising their prices again. So remember, the options market, stock market, it's all about buying and selling. So think about it like, oh, I'm buying food or I'm buying shoes, clothes. It's the same thing. Okay. We need to go back to that average price, which is a fair value, to then go back up. All right. So I think that's all that we're going to talk about today with moving averages. There's a lot of stuff on moving averages we could talk about, but one of my buddies wanted to know, hey, yo, what's going on with this moving average stuff, man? Like, what are these lines? And they're moving averages. It's shows you the average price, which is essential for knowing when you're getting something at a great cost. Okay. And again, that mean reversion happens when you get too far away from a moving average. And there's ways to calculate it that a lot of institutions do. They use standard deviations. So if you get certain standard deviations away from that moving average, you can kind of tell when the stock is going to reverse back down. Okay. At least when we're talking about uptrends. And generally, most people only know how to buy. We'll talk about it in another video, but it's your boy, Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.